INTS is up a massive 338.37%. This is Thursday, the 30th of October, 2025. Intraday high not long ago, $1.74. Yeah, the gain was actually way more than that. Way more than that. Okay, let's see what's going on. We'll find out more. It's a positive, some positive news. Promising cancer trial data. That is what is behind the spike. I think it spiked. It didn't spike in the pre-market session. It spiked in this regular session. I want to believe. Actually, yeah, it started in the pre-market session. Okay, but quite late in that session. Okay, the extrapolation is saying that higher prices will continue to print. Yeah, up till the 4th of November. Then after that, a consolidation with an accumulative consolidation. We may continue to play out going all the way towards the 11th of December. I really doubt it. I really doubt it's going to continue to print. If it doesn't decline today, tomorrow, after tomorrow, it may do so. There's more to come. There's more to come. From the stock. If it pulls back, there's more outcomes. You will listen to what we're going to say about what's going on with the company. Okay, everything's trending robustly. Positions opened, even the ones opened maybe not 200 days ago, but the ones opened up to 40 days ago easily in profit right now. The ones opened 200 days ago maybe not in profit yet, but the stock is showing a lot of strength within a longer term bearish trend. This is the bearish. This is the 200-day moving average. It underscores the trend on the stock, which is a bearish one because the stock is at a decline now. It's the slope is bearish. The slope is not up, it's down. On the 4-hour chart, so higher prices as well, expected to keep printing. Okay, so without wasting much time, let me show you what's going on. Over 1.1 billion shares have crossed the tape. Yeah, it's a penny. It was a penny stock. It is still a penny stock, and it was rising from the lows of what was that 0.3 dollars. Yeah, 30 cents. It was rising from those lows. So you can imagine that the amount of volumes we are talking about here will be a heavy one, and that is exactly what we're dealing with. And don't even know, it may have been halted from time to time. Okay, let's find out what's going on with the stock.
Here's a deeper dive into why retail traders are going gaga over INTS today, what's driving the excitement, what's real versus speculative, and what risks remain. Hashtag, what's the news? The recent spike in INTS is being driven by the publication of clinical trial results for INT 230 6 in eBioMedicine, a Lancet Discovery journal. Here are the key findings as announced. Among 64 patients with heavily pretreated, metastatic, or refractory solid tumors covering over 20 cancer types, the disease control rate was 75%, and median overall survival, MOS, was 11.9 months, according to PR Newswire. In a subgroup receiving doses covering more than 40% of total tumor burden, outcomes were even striking. 83.3% disease control and median OS 18.7 months versus 50% and 3.1 months in the lower dose group. Among patients with metastatic sarcoma treated with INT 230 6 alone, median OS was 21.3 months. Safety looked tolerable. No dose-limiting toxicities, only 7 grade 3 adverse events, and no grade 4 or 5 treatment-related events reported. Pharmacokinetics. More than 95% of the active cytotoxic agents remains localized in the injected tumor, i.e. minimal systemic leakage. Evidence of abscopal effects, i.e., shrinkage of uninjected tumors, was observed in 20% of patients in the higher dose subgroup. These results, especially if they hold up in larger trials, suggest a novel approach: local tumor injection causing both localized tumor kill plus systemic immune response. The company has already initiated further randomized controlled studies, including a phase 3 trial in soft tissue sarcoma, Invincible 3, Purse Release Newswire. Hashtag why retail investors are exploding in. Several behavioral and technical dynamics are amplifying the reaction. 1. Big upside potential in biotech moonshots. Biotech firms with promising clinical data often captivate retail traders, especially when the stock has been beaten down. Investors look for lottery ticket gains. A small investment could multiply many times if success continues. 2. Low valuation, high leverage. Prior to today, INTS was extremely depressed, trading with very low market capitalization and little institutional coverage. The risk is high, but so is the perceived reward if the drug turns out to be a breakthrough. 3. Short interest, short squeeze potential. The stock had non trivial short interest. According to Fintel, short interest is 2.25 million shares, about 5.26% afloat, with about 1.11 days to cover. When a stock moves strongly upward, shorts rush to cover, pushing the price even higher, a classic short squeeze scenario. 4. Media/social buzz. News articles, stock Twitch chatter, and coverage on momentum sites like TipRanks are turning this into a viral biotech story. Terms like extremely bullish and huge volume surges are drawing more eyeballs. 5. Catalyst expectations. The published data gives a tangible milestone. Beyond that, upcoming results from phase 3 sarcoma trials, regulatory decisions, or new trial readouts become future catalysts that could drive further upside. Hashtag what's real and what to be skeptical of. While the headline results are exciting, there are several important caveats and risks. 1. Early stage data, small sample size. This is a phase 1/2 single arm, no control, trial with 64 patients. The stronger results in the more than 40% dose subgroup are from a post hoc exploratory analysis, meaning these subgroups weren't necessarily pre planned. This introduces bias risk. 2. Survivorship and selection biases. Patients who survive longer may inherently differ, healthier, better tumor biology, etc. Also, heavily pretreated is a very diverse population. Comparisons across cancer types are tricky. 3. Reproducibility risk. Many biotechs have shown promising early results that fail in later larger trials. Success in phase 1/2 does not guarantee success in phase 3, especially when dealing with heterogeneous metastatic cancers. 4. Dilution risk. Small biotechs often issue more shares to raise capital, which can erode existing shareholders' value. INTS has already done some funding rounds this year. 5. Regulatory, manufacturing, and execution risk. Even if results are favorable, scaling up the therapy, navigating regulatory hurdles, and proving consistent results in diverse populations will be challenging. 6. Volatility and momentum over fundamentals. A lot of today's move is likely driven by momentum trading, which can reverse abruptly, meaning big downside risk if sentiment shifts. Verdict and what to watch. Why retail is so bullish makes sense. A long shot biotech with dramatic headline data, low starting point, viral buzz, and potential short squeeze dynamics. But it's a high risk, high reward play. The key will be how well the results replicate in randomized, controlled trials. Updates from the phase 3 sarcoma trial and other ongoing trials, safety data, regulatory feedback, and real world tolerability, and how the company manages capital and share structure. Whether institutional investors step in, bringing more scrutiny and stability.
Okay, so you've had it. There's some risk involved. This is still a phase one study. Okay, Um, have a look in the description box. You'll be able to read more about what you just listened to. Just be really careful. Be really careful. It's fascinating to watch. Let's just see what we have in terms of projections. We have seen 1.74. The algos here project even higher prices 1.96. I think the underlying trend is they've done a reverse split before. Yeah, yes, yes. They have there's ample room to the upside. There's nothing to worry in terms of upper projections. Let's see what we have on the weekly chart. We may be able to see even higher prices. Yeah, you can see here. Um, Probably its all-time weekly high is $8.57. Yeah, so there's ample room to the upside. Yeah, just have a look and see what you make of INTS, and we'll keep updating you on this. Thank you very much for watching this video.